Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very, very well.
I'm glad to hear it. How is life in Canada? Yeah, I know you got 2 injections. You're good. Trudeau's throwing out party gifts to all and sundry. It's fantastic.
The elections are coming. Yep. So, the whole slew of announcements on various projects. One thing that actually was good for us is he's promising one of the existing steel makers, and we don't have many existing steel makers in Canada, $400 million to decarbonize their production. So given that, we're looking at a low carbon stainless steel approach, for part of our production, I'm hoping, that we'll see something similar come our way as well eventually. So, the timings, these week's announcements are, I'm pretty sure, there's been lots of talk that we're going to go to the polls in September. So I think this is a little prelude to that. We open up fully July 21st in Ontario. So I think by the time the country's reopened in early August, if the Delta variant hasn't spoiled the party, sort of a week or two after reopening and everyone's, drunk from partying, they'll announce announce a new election and take advantage of the situation to get another 4 or 5 years out of it. So we'll see how it goes.
I find it so hard to believe that politicians would be so callous as to throw money around casually hoping to buy an election. It wouldn't happen here.
Never, ever, ever in politics. So
nope. Yeah. Right. Well, okay. Well, we will see what happens. There'll be who else could be beneficiaries? I know you guys, or mining should be, but who else is getting little party gifts?
Oh, well, we have. There's again the other part that the government's always kind of is a high-speed rail link. So between Toronto to Montreal. So, again, rather than spending money to fix the transit systems and transportation systems around a couple of the large cities, we're going to connect a large part of the country that doesn't actually have many people in it. That's
a good one. That's a good one. That bankrupted several big wealthy families in the 18th and 19th century,
Yeah, and I think that HS2 rail link in London has never not been sort of
it's happening
anywhere close to on budget or anything like that.
Not even close. We're like 4, possibly 5 times. It's kind of like one of those things that you think organic farming or is a sensible thing to do because it's very, very healthy for you. But then you suddenly realize your price of your food just went up 3 times. It's one of those. It's one of those. We should talk nickel. I'm not a big farmer. I don't know much about festivals. Right. So what's happening in the world of nickel? It's had a good week, hasn't it?
Yeah, it's hanging there quite solidly. Again, in this 18,000 to 18,500 range versus 820 to 835. The big thing is there's a bunch of news kind of as we're getting to, past the mid-year mark, people looking at, okay, how did we do in the first half of the year? And what does that look like for the second half of the year? And some pretty crazy numbers in terms of demand growth. So, again, nickel is 2/3, stainless steel production with, a whole new slew of future growth coming from EVs. And, again, at the start of the year, I had talked about 10 to 15% demand growth, with demand growth probably being closer to 15 than 10. It looks like even my number was conservative. And again, if you've been listening to these, a theme I keep banging on is people always underestimate demand growth. And this year has been no exception. I thought it was going to be a sloppy, choppy year as we digested lots of NPI production out of Indonesia. But, all this demand growth is totally taking care of that. And we've been in a deficit for the first half of the year, probably 60 to 80,000 tons. And, we'll see whether we're able to close that up by year end. But again, I don't think so. In terms of numbers, stainless steel production in China is up, 28% year over year. Indonesia is the new source of growth, and it's up over 100% year over year. It's now the second largest stainless producer in the world. And, again, some hack back in 2014 after the Indonesians announced an ore ban said that, by the end of the decade, Indonesia was going to be the largest nickel producer in the world and the second largest stainless steel producer in the world. So it took a little longer than the end of the decade. It's got their 300 series, which is the nickel containing, is even higher. And again, this is up 34%, year over year in the January to July period. Now, some of that is, a little bit of that is impacted by COVID, but remember, 2/3 of demand half, 60% is China, and China had a sharp dip in February, March, and it was already back out again. I think at this point we're probably looking at nickel demand growth of about 20%, for this year, and that's the old demand sector, which is stainless steel. And then when you flip over to the EV side of the equation, which is the new source of growth, some of the companies that track EV sales globally, May's numbers up 194%. Again, that was a COVID adjusted year, but if you look at all the months so far this year, we're anywhere from 100 to 200% higher year over year, with the line on the chart headed in the right direction. And what that translates to in terms of nickel use is, we're already well more than double nickel consumption for batteries. Just in China, we're 200,000 tons per annum. We'll probably exit the year, this just for China, at 250,000 tons per annum, which means globally probably close to 300,000 tons plus per annum. And if we're going at 50 to 100%, that alone will be close to 10% demand growth for nickel next, in 2022. So it's that, that's where I always thought the end of this year was where things were going to get exciting, when people start to see, what that compounding growth rate in the EV sector is. Sorry, I went on quite a bit there, but a lot of pretty exciting information.
Yes, a lot, absolutely. So I'm just sort of thinking back to, right, let's start with the basics here, which is capacity. China, Indonesia, Philippines, we talk about a lot. The Chinese have built a lot of capacity here. And you already alluded to the fact that, the Canadian government are having to, help one of your few facilities with a little boost of cash to, in terms of, I know that's focused around being carbon neutral, or at least less carbon producing. What's the rest of the world going to do in terms of capacity? Are we going to have to see more capacity built?
In terms of, I think, in terms of nickel, or in terms of.
In terms of like for instance, like stainless steel, right? So you've got to feed into somewhere. It's no point in getting nickel out of the ground. I think no one's doing anything with it.
Yeah, no, I think Indonesia is going to be the big source of growth. If you look historically, stainless production has always been concentrated in the new country. And so Indonesia is going to be that country going forward. But, the big plus, and again, part of the reason, we are looking at taking a chunk of our nickel production into stainless steel is right now, European stainless prices are up over $4,000 a ton. And since, for the first time since 2011, that last time nickel stainless prices were that high was when nickel was over $20,000 to $25,000 a ton, back at that time period. And the gap between Europe and Chinese stainless prices are over $2,300 a ton. And again, and that's in a product that's only 8% nickel. So, you do the math on that, and that's massive premiums available if somehow you could find a way to make more stainless steel in the US and Europe. And so that's, again, why we're definitely shooting part of our production that way. But the reality is most of the US European stainless production has been really focused on utilizing the scrap that gets generated in the country and remelting it. So, again, because the domestic nickel production in those countries is already used in much higher value added applications like alloys, specialty alloys, batteries, and so forth. And again, given the growth in the EV sector, that nickel will be, more than spoken for multiple times over.
Yeah. So to answer the question with regards to the capacity, stainless steel, Europe and the US, or North America generally, have got a lot more to do. There's a lot more investment going to be required. Because I keep coming back to this conversation we have all the time, which is, critical minerals and, strategic minerals and ecosystems, EV or otherwise. And China's getting on with it. For Indonesia is the next big place, you say, but for China, for Indonesia, read China. They're paying for it all.
Oh no, and that's and again, I think I've been pushing pretty hard the last few years in terms of this sort of bifurcated world between sort of China and its sources of supply and the West and its sources of supply. And so, again, if governments are really committed to decarbonizing, they're not going to depend on high carbon sources of nickel. From Indonesia to get there. So, again, it's a massive opportunity for domestic producers. And again, one of the election goodies was throwing out $400 million to help decarbonize the steel production facility in Canada. So, it's some pretty chunky sums of money that are being tossed around by the government. And so, again, I think it's going to be pretty exciting to see, how that plays out over the next year or two in terms of direct support for the mining industry to help decarbonize, certain industries.
Yeah, because this is slightly connected in the sense that it's a story about Mexico where Bolsonaro has basically given control over a very large, it's oil and gas. It's a discovery by a US firm called Talos. Very large field there, something like, I think, I'm going to go 800 million barrels of recoverable oil, right? It's pretty chunky. And they've given control back to Pemex. Say, right, okay, that's the state oil and gas company, and they've removed control from a US and New York listed company. This is, he has talked this language, but not really sort of delivered on it. So, but he's putting that down and say, right, this is energy defense measure. It's a political move. We've had enough conversations over the last year about, maybe it's bifurcated markets, maybe the government's going to step in. Do you think we're going to start seeing a bit more of a sort of wave of this nationalism in whatever form, whether it be funding like the Canadian Trudeau has just done with you guys, or do you think it could get the market could tighten in the next decade?
Oh, I think, when you look at the last 24 months, you've seen even safe countries like Chile and Peru, swing much more to the resource nationalism, in terms of share of, not just ownership in some cases, which Mexico and some countries are going to, but even just making sure that, a bigger chunk slice of the money stays in country, in developing countries. So, again, I think as investors, the jurisdictional risk, it's always a substantive risk. But I would say, that risk, relative to everything else in the investment is probably doubled or tripled. So again, if you're looking at making, investment in, mining company A in jurisdiction A versus mining company B in jurisdiction B, really, really pay attention to, the jurisdiction, because again, when governments make decisions like that and have the ability to do it and seem to have the political support to do it, it can wipe out huge amounts of value in a very short span of time. And as an investor, you can get totally blindsided. So, if you own investments in risky countries, make sure you're following the political situation and, getting out of Dodge well before, anything that happens there. So, or make sure that you're prepared to, that whatever upside is in the actual underlying mining investment is worth the additional political risk.
Do you think that's going to start affecting the way, I mean, you speak to automotive manufacturers regularly, they're checking in to see how you guys are getting on. I mean, in terms of their supply chain, they're trying to fix their supply chain, whether it's, getting contracts in place for lithium, for nickel, for copper, whatever they're getting. They have been multinational players. They have, automotive manufacturers move their production to countries like Mexico, to China, and elsewhere, which are now, because there's narrative going on, not necessarily seen as friendly trading partners. If I listen to the American rhetoric, right, the US government rhetoric, do you think that's going to start affecting their decision making in terms of where they go? Is Tesla going to say, well, maybe we do need to come out of China? That's not going to work for us in the long run. There will be a moment.
Oh, no. I think most, definitely, it wasn't, in Tesla's Battery Day presentation last fall, and again, the rhetoric, has amplified multiple times since that time. Already at that time, they're making it very clear that they wanted to localize, the supply chains, for their various factories. So, I think, going forward, sort of the next, when they announce their next generation of plants, they'll still want to produce locally to have, be able to supply China locally. But beyond that, I would be very surprised to see more of their investment concentrated, in the U.S. and Europe relative to, what they might have considered, 5 years ago. So
interesting times. I just thought, like, I saw that Pemex conversation. I was like, okay, that's going to make a lot of people nervous, and not just for Mexico, but for South America, for parts of the rest of the world, which investors need to be wary of. Okay, so we also saw some numbers out. We're talking about NPI. NPI now is more. Is it more than 50% of global supply? Is that right?
Yeah. So so we talked about this huge demand growth globally, and again, we're expecting NPI growth to be very strong this year as well, and that definitely has come through, and again, so NPI production in China and Indonesia is now more than half of global supply. And again, remember that it was zero back in 2005. But what's been surprising, again, in this backdrop of strong nickel demand and reasonably strong nickel prices, is rest of world supply continues to shrink. So again, sort of been banging on the drum on this over the last few years is, again, if you're Tesla or somebody who wants new sources of nickel nearby, it's not like, hey, we've got this unused capacity, we'll just turn a knob and get you 20% more nickel next year. Even with the significant pickup in prices, the rest of world supply, continues to shrink. Now, part of that was New Caledonia. There was some massive issues during the first half of the year, but there's been nothing else in the rest of the world was there to offset it. So it's been a multi-year trend lower in terms of supply growth from the rest of the world, and to be able to take these multi-year trends down and turn them up again is not a 6-month $100 million investment decision. It's a 5-year $5 billion plus kind of investment decision. So again, the value of good large scale assets in low risk jurisdictions, it is with all of the stuff that we just talked about is getting sort of just getting that much more valuable for what's needed in the coming decade.
Okay, so like if we look at China, they've got a track record of overbuilding.
Yeah.
More capacity than they need, and they're now eyeing up Indonesia. Are we expecting more of the same, and how did the Indonesian government feel about this?
Well, that was, so I mean, the big announcement in the past week has been the Indonesian government said, oh, wait a minute, maybe we're not going to permit any new nickel pig iron plants. And again, the bear case for nickel has been, don't worry about it. Indonesia is going to make enough nickel for everybody. The Chinese are just going to keep building these NPI plants, and production will magically grow forever and stay sustained forever. And so, there's a couple of sort of key pieces. So one, the Indonesian government said, oh, wait a minute. Yeah, maybe we need to think about preserving our production for resource base for higher value uses. And then one of the analysts who does some good sort of fundamental digging work, highlighted the fact that, ore grades in Indonesia are already starting to drop. So, they were, Tsingshan, I know, used to have a 1.9% grade cutoff, and then everyone else was kind of around 1.8, and now they're talking about that those grade cutoffs, have dropped to kind of 1.7, and 1.6%, to be able to supply enough nickel. So, what that means, it doesn't sound like much, but, going from 1.8 to 1.7, that's 6 to 8% less material to the same cost. So your costs just went up, by 8%, and every one of those drops proportionally gets even bigger. So, you're looking at, what this does is suggest that, okay, we're now going to start to see very steady increases in the cost of that production going forward. We're also going to see, the one thing with laterite deposits is, when you have a big underground mine or a big open pit mine, you have some degree of flexibility in terms of how you mine it, and you obviously mine their highest value stuff first, but you can't sort of pick and choose which chunk of rock you take. So there's a sequence that you have to go through. And laterite mining, it's basically 10 to 20, 30 meters of dirt spread out over a massive area. And so, unlike the hard rock open pit mining or underground mining, laterite mining is actually quite easy to go around and pick out all of the best stuff and the lowest cost stuff that's closest to the plant. So, again, when you could take the starting, we're on this ore grade decline, and you're starting, you should start to see the, stuff further and further out from the plant. It'll be interesting to see sort of, how that plays out. Fortunately, you don't get, too much visibility on some of that stuff, but, we'll see Nickel Mines is one of the, is basically the public entity view into the Tsingshan world. So it'll be interesting to see sort of, whether we start to see some of this stuff, come through their financial statements, over the next year or two.
Yeah, I mean, I think high grading is obviously a problem in lots of commodities, lots of countries. It's not a new phenomenon. I guess it's really just trying to understand. In this case, because it's not like anyone's going to be investing in Chinese companies in Indonesia, but it's the effect that it has on supply into the market, next decade, etc.
Oh, big time. I mean, it really is. So, my two biggest sort of issues with the bear case for sort of unlimited NPI is, one, it was considered unlimited, and the fact that, the Chinese, when you look at when they ever enter a new market, they build like crazy, and they typically end up operating those plants at, 60% capacity eventually, because there's so much overbuilding. But that's, again, all these, everyone seems to assume, the Chinese have it all figured out, and they're going to be 95%, capacity utilization in Indonesia. Again, some people started to dial it down, but still, way more capacity utilization than they really do in any other industry. It's kind of always been a build it, and we'll figure out where we get the feed from. And, oh, shoot, there isn't enough feed. So, again, now that we're actually seeing concrete signs of that happening, and that there is, with the grade starting to drop off already, that's pretty telling in terms of, okay, it's not for sort of a free lunch. There's as much laterite as you can ever imagine that's going to be available to keep this going. And this is right now the only source of new supply. Again, I've not been nervous around seeing 2 million tons plus come out of Indonesia eventually, because that's the only place that a big chunk of the supply that the market needs can come from. So, these announcements this week to me are sort of a good sort of whack in the knees on the bear case that people should really, really pay attention to for the medium and long term.
Okay. And talking of which, grades declining, we're going to see, and we talked a little bit about it last week, we're going to see sort of a dusting off of a lot of old projects which didn't kind of work then. And some of them might, if the prices continue to do what they're doing, steady increase in pricing, some of them might work, but a lot of them still won't. So we just need to be cognizant of the stories that are going to come onto the marketplace in this type of environment.
Yeah, no, for sure. So, last week we, I think went through in detail, really make sure you are very selective in terms of new stories that come out, because again, a large part of them is stuff that's been sitting on the shelf for a while, and kind of polish it up a little bit. And, this is a brand new shiny target. And again, last week was, pick the right team, look at the track record of the team. Are they bringing something new to something that hasn't been looked at for a while? And if both of those things are true, then maybe I'll look at it. But if one or both are not there, then, if you want sort of a high torque thing that's going to just run as the metal runs, then great. But, again, buyer beware that, there's the the hotter a metal gets, the more unscrupulous the people who end up promoting the stories are. So proven track record, and actually some new approach to unlocking value at that target, is a must have as you look at stuff. So the good thing is there are good stories. So again, just the past week, some spectacular results. Poseidon had to halt their stock because some news obviously got out. They in nickel, you rarely get double-digit nickel grades, but they had a couple meters at 13% nickel. Again, this is in the old Silver Swan mine. They're defining a new deposit. Again, I highlighted last week in terms of if you want to see what sort of systematic resource development looks like. They're doing a very good job with that. And then Talon, they had announced the intersection, but again, as everyone in the industry is facing, assays are taking a long time to get there. So they finally got the assays on one of the first intervals, and it was some very shiny looking core, and the grades came through nicely. It was 5.5% nickel and 2% copper, over nearly 14 meters, which is a tremendous intersection. And good, good to see, that in a new area outside their existing resource. So, we'll track those. And next week, I'll start to look at some of the other smaller ones that are sort of coming on the scene here as well, and give an update on that.
Fantastic. Okay. Well, let's do that. Let's sort of have a little look at some of these new ones coming through, what they're going to need to do, what they're going to have to say to, convince the market that it's going to actually work. Otherwise, as you say, ride it on the way up, but make sure you're not riding it on the way down. And throwing the word AI at it doesn't make it work. We've seen that so much. Brilliant, Mark. Well, thanks for the update. I hope all is well with you. How are things on your side of the fence with Canada Nickel Corporation?
Oh, it's great. We actually just closed a financing. We've got a bought deal done yesterday that keeps us well funded through the end of the year. The key thing there is you just keep your treasury, more than full. We're in discussions with some strategics, which gives us lots of flexibility to, where those discussions end up. And, from our exploration results last week, obviously we've got no shortage of good targets to continue to drill. And this money will keep, allow us to keep going full steam ahead on that front. So, which is great. And, again, in the backdrop, I would say, the last few weeks in terms of the announcements around the demand side, and then the announcements we just discussed on the supply side, I'm substantially more bullish, on the short to medium term for nickel, with both demand and supply, things heading in the right direction, than I have been in quite a while. So, as I said, it was going to take till the end of the year to get going, but this data showing, it's we're in great shape, and I think we may see that move up in nickel prices happen a little higher, higher than sooner than later. So
good man. Hey, well, you must come on and tell us that. So we haven't actually spoken to you since the PEA, was announced a few weeks ago now. Yeah. So yeah, come on and give us an update whenever you want, because I'd be keen to sort of see how you guys, continue to build this thing out. If you think things are accelerating, then that would be interesting to us.
For sure. Yep, that'd be great.